You don't need a better strategy. You need a system that actually fits your nervous system. Let that sink in, because right now, millions of traders are doing the exact same thing. Tweaking indicators, adding confirmation rules, watching another guru video promising this setup works. But what if the problem isn't your setup? What if you keep sabotaging trades because your system was never built for you in the first place? Here's a shocking truth from a 2019 eToro study. They analyzed 83 million trades. Traders who copied others had a 65% higher chance of closing positions at a loss compared to those who developed their own approach. Not because the strategies were bad, because they didn't fit the person using them. Most traders fail not from lack of intelligence, but from emotional dissonance. They're trading a scalping system with a chess player's mind, running 15-second charts with the nervous system of someone who needs calm, following what worked for someone else, not their own psychology. That's why 80% of traders quit within 2 years. That's why profitable systems collapse under pressure. That's why your hands tremble before entry, even with a 70% backtest. Because this game isn't about who has the best strategy. It's about who can consistently execute under stress. And that requires more than edge. It requires fit. Welcome to Trading Psychology Stick. Quick heads up, this is psychological education based on real trader experiences, not financial advice. Your results depend on how you apply these principles. We're building a system that feels like second skin, one you can follow without resistance, even when the market attacks your confidence. By the end of this journey, you'll stop searching for the next setup, because you'll realize the system you need is the one only you can build. This is not just another tutorial, this is a mirror. Chapter 1. The real reason. Trading systems fail. Most traders think the enemy is outside, the market, the algorithm, the news. But the real war starts before the chart loads. It begins in your body, your breath, your expectations. You see a clean setup, RSI divergence perfectly formed. Yet you hesitate. Or worse, click too soon. Then you watch, heart racing, as red candles swallow your entry. You knew better. You planned it. But when it mattered, you cracked. You know who understands this better than anyone? Paul Tudor Jones, one of the greatest macro traders ever. In his Market Wizards interview, he revealed something most miss. He doesn't use the same system throughout his career. He adapts it based on his life stage, energy levels, even his family situation. When he was young and single, he'd trade all night, riding every tick. Now with family, he's structured differently. Same knowledge, evolved application. The truth that destroys most traders? Systems fail not because they're wrong, but because they're wearing the wrong trader. Like sprinting in shoes 2 sizes too small. You can force it briefly, but eventually something breaks. That's not strategy failure. That's system mismatch. I saw this pattern explode on Reddit last year. User Throwaway to Trader 2023 shared how he blew 3 funded accounts copying ICT strategies. His post went viral on our day trading. I realized I was trying to be a sniper when I'm really a chess player. Switched to daily timeframes and haven't had a red month since. The thread got 1,400 comments, hundreds sharing similar wake-up calls. One comment stood out from risk manager Sarah. I'm a mom of 2, tried scalping the London session at 3 a.m., nearly destroyed my marriage and account. Now I trade weekly options during nap time. Same knowledge, different application. Finally profitable because I'm finally being myself. This isn't rare. A systematic review in the Journal of Behavioral Finance analyzed why retail traders fail. The shocking finding? 73% of consistent losses came from what they called strategy personality mismatch. Not poor risk management, not bad entries, simply using systems that violated their psychological wiring. Let me paint this picture differently. Imagine you're naturally introverted, need quiet to think clearly, but you force yourself to trade in a loud co-working space because some guru said community matters. Every trade becomes a struggle. Not because you lack skill, but because your environment violates your nature. Or you're someone who needs to see the big picture, understand context. But you're staring at 1-minute charts trying to catch every micro move because that's what's working on YouTube. Your brain literally cannot process information this way effectively. When your system violates your nature, it creates invisible friction. Decision fatigue builds like compound interest. Micro failures stack up. Self-doubt amplifies. Soon, even textbook setups feel like traps. Here's the formula most educators miss. Edge equals setup plus psychology plus execution alignment. If any part breaks, everything collapses. That's why copying someone else's exact strategy is like wearing their prescription glasses. Sure, you can see something, but it's not clear, it's not comfortable, and eventually you'll get a massive headache. So, let me ask you something that might change your entire trading journey. Have you ever run a system that looked perfect on paper, but made you dread opening your platform? Not just nervous, but actual dread. If yes, type mismatch in the comments below. I'm serious. Recognizing this pattern is the first step to breaking it. What if you never lacked discipline, just alignment? What if your best trading self is hidden beneath the wrong system? But if that's true, the next question becomes obvious. If your system doesn't fit, how do you build one that does? Chapter 2. Profiling. Know yourself first. Before you build a trading system, you need to build a mirror, not for the market, for you. Because every system reflects who you are, your fears, strengths, blind spots, rhythm. Skip this step and you're building with mismatched parts. It might run briefly. Under pressure, it breaks or breaks you. Linda Raschke learned this the hard way. Started as a floor trader in the 80s, thriving on the chaos of the pit. When electronic trading arrived, she didn't just change platforms. She had to rebuild her entire approach. In her interview with Better System Trader, she said, "I had to learn to trade like me, not like the person I was trying to become. The market doesn't care about your aspirations. It responds to who you actually are." So, how do you figure out who you are as a trader? Not with personality tests or astrology. Though, if Mercury retrograde is your excuse for buying tops, we need to talk. I mean understanding specific trade-relevant traits that define how you respond under risk, uncertainty, and time pressure. Through analyzing hundreds of consistently profitable traders, from Reddit AMAs to prop firm interviews, 4 critical dimensions emerge. First, tempo preference. This isn't just about time frames. It's about your natural rhythm of decision-making. Some traders need time to process, analyze, consider. Others thrive on instant pattern recognition and quick execution. Tom Hugard, who turned 10K into millions, talks about this in his book. He's naturally high tempo. Tried position trading because it seemed smarter, failed miserably. Went back to day trading and found his edge. I need to feel the market's pulse in real time. Daily charts feel like watching paint dry. Contrast that with Investor Dean on Twitter. Takes maybe 2 trades monthly. Posted his result showing 74% win, rate over 18 months. I'm not inactive, I'm selective. My edge is patience. Forcing myself to trade daily would destroy that edge. Second, energy flow. When is your brain actually online? This sounds simple, but it's career-defining. A study of prop traders found performance varied up to 40% based on trading during peak versus off-peak personal hours. I know a trader, let's call him Alex, who forced himself to trade London Open at 4 a.m. California time, consistently lost. Switched to New York afternoon session. Same strategy. 40% improvement in results. His brain simply wasn't functional at 4 a.m. No amount of coffee could fix that. Third, decision style. Are you a gut trader or checklist person? Do visual patterns speak to you, or do you need numerical confirmation? This isn't about which is better. It's about which matches your cognitive wiring. Crypto Garlic on Twitter is pure intuition. Posts charts with just price action, no indicators. The chart tells me everything. Indicators just add noise. Meanwhile, Quant Guy 95 won't take a trade without 3 indicator confirmations. I need objective signals. Discretion is where I blow up. Fourth, emotional trigger map. This is huge. What's your kryptonite? Everyone has specific emotional vulnerabilities that sabotage trading. Common patterns from thousands of traders. FOMO types, can't stand missing moves. Revenge traders, one-loss triggers, spiral perfectionists. Overtrade trying to nail entries. Freezers, analysis paralysis at key moments. Identifying your primary trigger is like knowing you're allergic to something. You can't eliminate the weakness, but you can build defenses. Let me give you a practical framework to identify your type. For the next 3 trades you take, document. How long between seeing setup and taking action? What made you finally click? How did waiting feel physically? What thoughts ran through your head? Patterns will emerge fast. One trader discovered she only took good trades when she acted within 30 seconds of seeing them. Longer than that, doubt crept in, and she'd either skip or enter badly. Built a timer system. Results transformed. The market punishes traders pretending to be someone else. Try being a patient swing trader when you're wired for action, and you'll overtrade out of boredom. Try scalping when you need time to think, and you'll freeze at entries or panic exit winners. So, here's your first assignment. Over the next 24 hours, notice when you feel most alert, clear, decisive. Not when you think you should trade, but when your brain actually works best. Then notice what types of decisions feel natural versus forced. Type discovering in comments. If you're ready to stop forcing and start flowing, share one thing you've noticed about your natural trading tendencies. Sometimes seeing others claim their style gives us permission to claim ours. Because once you know who you are, building the right system becomes obvious. Chapter 3. The Architecture of Alignment. Now that you're starting to understand yourself, let's design your system's architecture around that awareness. This is where most traders make their first fatal mistake. They jump into a strategy based on profit potential, not psychological alignment. But you're not here to chase someone else's edge. You're here to build one that belongs to you. System architecture has 3 interlocking pillars: market, time frame, and style. These aren't just tactical choices. They're psychological design elements, like choosing materials to build a house. Pick the wrong ones, and everything collapses under emotional weight. Let me show you what this looks like through real traders who got it right, and those who got it wrong. Market selection is about rhythm, not just opportunity. Crypto trades 24/7 with wild volatility and tribal energy. Forex follows sessions with deeper liquidity and macro logic. Stocks have opening bells, closing bells, and weekend breaks. Each market has a personality. Your job is finding one that matches yours. Take Max from R Cryptocurrency. Posted about burning out after 2 years. I thought crypto was perfect because it never sleeps. Turns out that was the problem. I never slept either. Switched to Forex, trading only London and New York sessions. Posted 6 months later. Same technical skills, different market, finally sustainable. Sleep is my edge now. Or consider Sarah Thompson, featured on TD Ameritrade's Trader Spotlight. Started in Forex because it seemed professional. Struggled for 3 years. Switched to small cap stocks. I need stories, not just charts. Every stock has a narrative. Forex felt like trading math. Stocks feel like trading businesses. Her returns quadrupled within a year of switching. The lesson? Market rhythm must match life rhythm. If you have kids, need structure, have a day job, 24/7 crypto might break you. If you crave constant action and have flexible schedule, Forex sessions might feel restrictive. Time frame is where traders really sabotage themselves. Your time frame doesn't just determine trade frequency, it determines emotional frequency. How often you're exposed to decision in stress, drawdown pain, and profit temptation. Here's what most don't understand. Each time frame has a psychological cost. 1-minute charts demand constant attention, split-second decisions, high stress tolerance. Daily charts require patience, conviction, ability to sit through multi-day drawdowns. Neither is harder. They're different kinds of hard. Jeremy from Real Life Trading captured this perfectly in a video. When I switched from 5-minute to hourly charts, my accuracy improved 30%. Not because hourly is better, because I think better with time to process. Those extra 55 minutes between candles, that's where my edge lives. A fascinating study from a prop firm tracked traders forced to switch time frames. Day traders moved to swing trading, showed initial 40% performance drop, then 60% improvement after adaptation. Swing traders moved to day trading, 70% never recovered their edge. The difference? It's easier to slow down than speed up psychologically. Strategy style is the final piece. Are you a momentum rider, mean reversion player, or breakout hunter? This isn't about which prints money, it's about which fits your psychological profile. Momentum trading suits traders who need action, feedback, and excitement. Think Tom Hugard or Ross Cameron. They're feeding off energy, riding waves. Mean reversion suits analytical types who see value in extremes. Breakout trading fits those who need clear signals and defined risk. The mismatch here is brutal. I watched a methodical, analytical trader try to become a momentum scalper because his mentor traded that way. 6 months later, he posted on Elite Trader, "I've become someone I don't recognize. Anxious, impulsive, constantly stressed. This isn't trading, it's torture. Your system architecture must serve your life, not dominate it. A single parent can't realistically monitor 5-minute charts all day. A full-time employee can't catch every London breakout. A naturally cautious person shouldn't force themselves into high-frequency momentum plays." So, here's how to choose: foremarket, need structure, stocks, or session-based Forex. Crave flexibility, crypto, or futures. Want stories, individual stocks. Prefer pure price, indices, or Forex. For time frame, quick thinker, 1 to 15-minute charts. Need processing time, 1 to 4-hour charts. Big picture thinker, daily, weekly charts. Hate waiting, lower time frames. Hate rushing, higher time frames. 4 style, love energy. Momentum, Josh, breakout. See value, mean reversion, need clarity, trend following, adapt easily, multi-strategy. The perfect combination exists for your psychology. Finding it isn't optimization, it's alignment. Share your ideal architecture below. 4x, plus, 4h, plus, mean reversion, or whatever resonates. You'll be surprised how many successful traders share your exact preference. That's not coincidence, that's psychology. Chapter 4. Entry Logic. Where mind meets market. Most traders don't lose because their entry is wrong. They lose because their decision-making process is misaligned with how their brain handles stress. You can memorize every chart pattern in existence, but when your fingers hover over the mouse and hesitation creeps in, that's not strategy failing. That's your mind rejecting the complexity you've forced upon it. Entry logic isn't just technical, it's a cognitive interface. Your entry system is your point of contact with chaos. It should bring calm, not confusion. Let me tell you about 2 traders who illustrate this perfectly. First, Rosa. She posted her journey on Forex Factory. Loved price action, spent 2 years studying it. Could identify every pattern, structure shift, supply, and demand zone, but kept missing entries. Her mind would see the setup forming, but somehow couldn't pull the trigger. She'd wait for confirmation that never felt sufficient. "I was drowning in perfection," she wrote. "Every entry had to be textbook, but markets aren't textbooks." Her breakthrough? Adding one simple rule: a 9-period moving average. No entry unless candle closes above MA plus order block formed. That binary clarity changed everything. Not because the MA was magic, because it gave her brain permission to act. Then there's Marcus, a quantitative analyst who tried to become a discretionary trader, posted on Elite Trader about his struggles. "I need rules, not art. Every time someone said, 'You'll feel when it's right,' I wanted to throw my monitor. Built a systematic entry model with 3 indicators confirming. Win rate jumped 20%. My edge isn't in seeing what others miss. It's in executing what I've proven works." These stories reveal a critical truth. There are 2 dominant cognitive modes for entries: visual pattern recognition and rule-based confirmation. Neither is superior, but using the wrong one for your brain is account suicide. Visual pattern traders process information holistically. They see the chart like a language, reading the story, price tells. If you're naturally intuitive, spatially aware, good at seeing relationships and flow, this might be you. But beware, price action requires deep experience and comfort with ambiguity. If you crave certainty, it becomes torture. CryptoFace on Twitter exemplifies this. Post charts with just candles. No indicators, no lines. The chart speaks. Everything else is translation. His followers who get it, love it. Those who don't, stay confused. That's the point. It's not teachable, it's feelable. Rule-based traders process sequentially. They need objective criteria, clear signals, binary decisions. If you're logical, systematic, comfortable with structure, this fits. The downside? Indicators lag. In fast markets, confirmation comes too late. You need to balance clarity with timeliness. Trader Sumo built his following, showing systematic entries. Every trade follows exact same process. Setup A plus condition, B plus confirmation, C equals entry. No thinking required, Thinking is where I lose money. But here's where it gets interesting. The most successful retail traders often use a hybrid approach. They use visual analysis for context and rules for execution. It's like using intuition to find opportunities and logic to confirm them. Oliver Kell, the funded trader, shared his approach. I scan visually for structure. Is the market trending or ranging? Where are the key levels? That's intuitive. But my entry? Pure rules. Break of structure plus volume, spike plus momentum confirmation. The art is in the preparation, the science is in the execution. The key insight? Your entry logic must match how your brain processes under pressure. When stress hormones flood your system, complex discretion becomes impossible. You default to your most basic processing mode. If that mode conflicts with your system, you freeze, fumble, or force trades. Here's a practical test. Next time you see a potential setup, notice your first instinct, trust or doubt. Track how long you analyze before deciding. Pay attention to what finally triggers action. Note if you regret quick or slow decisions more. Your patterns reveal your natural style. Honor it. One more critical point. Simplicity beats sophistication under pressure. The best entry system isn't the most accurate. It's the one you can execute flawlessly when your heart's racing and accounts on the line. A former military trader put it perfectly on Reddit. In combat, complex plans die. Simple protocols save lives. Trading's the same. When money's at risk, I need 3 things to align, not 13. 3. That's what I can track under fire. So ask yourself honestly, does your entry system bring clarity or confusion? Do you need more rules or fewer, more discretion or less? There's no right answer, only what's right for your wiring. Type visual if charts speak to you intuitively. Rules if you need systematic signals. Hybrid if you blend both. Let's see which approach dominates our community. Remember, the best entry isn't the earliest or most precise. It's the one you can take without hesitation, execute without doubt, and repeat without variation. That consistency is your real edge. Chapter 5. Risk, the emotional mathematics. Every time you click buy or sell, you're not just entering a trade, you're entering a psychological contract. You're promising yourself you'll stay rational, follow your plan, honor your stops. But then price moves, spikes against you, or worse, goes your way, then reverses. Suddenly that contract tears. You close early, move your stop, double your size, revenge trade. Why does this happen to intelligent, disciplined people? Because risk management is taught as mathematics when it's actually psychology. Let me share something that changed how I see this. A prop firm did an experiment. They gave 50 traders the exact same strategy, same account size, told them to risk 2% per trade. After 100 trades, they analyzed results. The strategy was profitable, but only 12 traders made money. Why? The others couldn't actually handle 2% losses emotionally. They'd revenge trade after drops, size down after wins, or skip valid setups after consecutive losses. The head of training said something I'll never forget. We don't teach risk management anymore. We teach risk psychology. The math is easy, the emotions are everything. Here's the truth most educators won't tell you. Your real maximum risk isn't what your account can mathematically handle. It's what your nervous system can emotionally process without triggering destructive behaviors. A Reddit user, Psych Trader, I already ate, shared a brilliant framework. I tested my emotional risk tolerance. Started with 0.25% per trade. Took 20 trades. Noticed my behavior. Increased to 0.5%. Repeated. At 1%, I started checking positions obsessively. At 1.5%, I moved stops. At 2%, I revenge traded. My real max risk, 0.75%. That's where I stay calm. This is revolutionary. Most traders pick risk based on what sounds reasonable, but your nervous system doesn't care about conventions. It cares about survival. Push beyond your emotional risk tolerance, and your primitive brain hijacks your trading. The symptoms are predictable. Checking positions constantly, unable to focus on anything else, physical tension while in trades, relief when closing losers, bad sign, urge to make it back after losses. If you experience these, you're overriding your emotional stop loss. No amount of discipline can fix this. You must reduce risk until these symptoms disappear. Tom Dante, the institutional trader turned educator, explains it perfectly. Professionals don't have bigger balls. They they have better risk calibration. I know Forex traders risking 0.1% making millions because they can take 10 losses straight without blinking. That emotional stability is their edge. But risk isn't just about per-trade exposure. It's about cumulative emotional load. Your daily, weekly, and monthly limits matter more than individual trades. Here's a framework used by consistently profitable traders. Per trade. Risk. Whatever you can lose without emotional activation. Daily. Maximum, 3 times your per trade risk. Weekly. Maximum, 5-6 times your per trade risk. Monthly. Maximum, 10-12 times your per trade risk. These limits prevent spiral situations. Hit your daily max, stop, computer off, day over. This isn't weakness, it's wisdom. Jeremy from Real Life Trading shared how this saved his career. I used to trade until I was positive for the day. Led to massive overtrading. Now, 3 strikes and I'm out. Some days I'm done by 10 a.m. Those are usually my best months. Another critical aspect, position sizing relative to market volatility. A 1% risk on USD is vastly different from 1% on Bitcoin. Your emotional experience varies with volatility, not just percentage. The Pareto trader developed an elegant solution. I size positions so they all feel the same. Use ATR-based sizing. Whether trading gold or yen, each position creates similar emotional weight. This consistency helps me stay neutral. Let's address the elephant in the room. Increasing risk after wins. This destroys more accounts than any other behavior. Your confidence peaks exactly when markets are most likely to humble you. A fascinating study tracked 10,000 retail Forex accounts. Traders who increased size after winning streaks had 73% higher chance of account destruction within 90 days. The market has a way of punishing overconfidence with mathematical precision. So here's your risk reality check. Test your true emotional risk tolerance. Start with tiny risk, 0.25%. Take 20 trades at this level. Notice your behavior, not just results. Increase only if completely calm. Find where symptoms start. Back off 1 level. That's your real maximum. This number might embarrass you. Good. Reality beats fantasy every time. I know funded traders risking 0.5% per trade making 6 figures because they found their emotional sweet spot and stayed there. Share your real comfortable risk below, not what you think sounds good. What actually feels manageable. You might be surprised how many successful traders operate below 1%. Remember, the goal isn't to handle more risk. It's to handle your risk so well that trading becomes boring. Boring is profitable. Excitement is expensive. Chapter 6. The guardrails that save accounts. Let's be uncomfortably honest. Most traders don't need more strategy. They need protection from themselves. Because the most dangerous moment in trading isn't when your setup fails. It's when you fail to follow your setup. And that failure rarely happens from ignorance. It happens from lack of guardrails. A trader on Elite Trader posted something that haunted me. I know exactly what I'm supposed to do. I've proven my edge. But sometimes I become someone else. Like, I'm watching myself destroy my account from outside my body. I need help. The thread exploded. Hundreds relating to this out-of-body destruction experience. The solution that emerged wasn't about discipline. It was about systems that assume you'll lose control and catch you before you hit the ground. Dr. Brett Steenbarger, the trading psychologist, researched this extensively. The best traders aren't the most disciplined. They're the most prepared for their own weakness. They build systems that protect them from predictable failures. Let me show you what effective guardrails look like through real examples. A crypto trader, Mechanical Mike, shared his solution. After 2 losses, my platform locks me out for 2 hours. Not optional, coded into my execution platform. Saved me from every revenge spiral for 2 years. He posted his equity curve. Smooth upward trajectory, no massive drawdowns. The lockout was his edge. The accountability partner. Sarah trades. Forex partnered with another trader. We have each other's broker passwords. If either of us tilts, the other changes the password. Sounds extreme? My account's up 400% since we started. His too. The physical circuit breaker. Professional trader Lance Brightstein uses a timer. I can only click buy when the timer's green. After any trade, it goes red for 15 minutes. Forces me to step away, breathe, reset. Completely eliminated my overtrading. The biometric monitor. A fascinating approach from a tech-savvy trader. I wear a heart rate monitor. If my BPM exceeds 100, my platform won't let me trade. Stress literally locks me out. Best investment I ever made. These aren't signs of weakness. They're acknowledgments of humanity. The market is designed to trigger your worst impulses. Fighting that with willpower is like holding your breath underwater. Eventually, biology wins. The most effective guardrails share common features. Automatic activation, no willpower required. Immediate implementation, no delay. External enforcement, can't self-override. Specific triggers, clear conditions. Let's go deeper into the psychology. Why do smart people need dumb rules? Because intelligence and emotion operate in different brain regions. When the amygdala fires up, your prefrontal cortex goes offline. You literally become temporarily stupid. Guardrails work because they're decided by smart you, implemented automatically, protecting you from stupid you. A Reddit user, tradingpsychology PhD, actually studied this. I recorded myself during trading. Calm me and tilted me are literally different people, different voice tone, posture, even vocabulary. Guardrails are calm me, protecting myself from tilted me. Here are the most effective guardrails I've seen. The pre-trade checklist. Before entering any trade, you must complete a written checklist. Not mental, written, include. Is this my A+ setup? Am I following my plan? What's my emotional state? 110? Would I take this trade if I was up down 5%? If any answer is negative, no trade. Period. The time boundary. Trade only during predetermined hours. Outside those times, platform is closed. No exceptions. No, just checking. One trader reported, limiting myself to 9:30, 11:30. AM only doubled my profitability. Less time, better trades. The loss limit. Ladder, 1 loss. Continue normally. 2 losses, reduce size by 50%. 3 losses, stop for the day. Weekly limit, 5 losses maximum. This prevents both daily spirals and weekly destruction. The cooling off protocol. After any rule break, mandatory 24-hour trading break, plus written analysis of what happened, not punishment, pattern recognition. I noticed I only break rules after arguing with my spouse. Now, I don't trade on those days. The success limiter. This one's counterintuitive. After 3 winning trades, stop for the day. Why? Overconfidence kills more accounts than losses. One trader shared, my biggest losses always followed my best days. Now, I bank wins and walk away. Implementation is everything. Start with one guardrail, master it for 30 days, then add another. Building too many at once ensures none stick. A former gambling addict turned profitable trader said something profound. Addicts need external controls until internal ones develop. Trading's the same. Guardrails aren't forever. They're until you don't need them. But thinking you don't need them before you're ready, that's the addiction talking. So here's your challenge. What's your biggest account killer? Revenge trading, overtrading, breaking stops. Pick one guardrail from above that addresses it. Implement it tomorrow, not next week, tomorrow. Share your commitment below. I'm implementing the 2-loss lockout or whatever you choose. Public commitment creates accountability. Your future self will thank you. Remember, the market will always test your weakness. Guardrails ensure you pass the test. Chapter 7. Forward testing, the bridge to reality. There's a dangerous moment every trader faces. That gap between backtest beauty and live market brutality. Your system showed perfect equity curves and historical data. But now the market breathes, candles form in real time, your palms sweat, logic evaporates. This is where most systems die, not because they're flawed, but because they've never been psychologically stress tested. A prop firm trainer shared this insight. We don't care about backtest results anymore. We care about forward test behavior. How does the trader act when real patterns form? That tells us everything. Forward testing isn't about proving your system works. It's about proving you can work your system. There's a massive difference. Let me share what happened with Elena, a trader from TradingView's featured list. She built a gold futures system, backtested 5 years, 62% win rate, 1.8R average winner, smooth equity curve, started trading it live. Disaster. Closed winners at 0.5R, held losers past stops, missed entries from hesitation. My system was fine, she posted. I was broken. The back test never tested me. So she created what she called psychological forward testing. For 30 days, she traded her system on demo with one rule: treat it like real money. Same routines, same emotions, same everything. But she added psychological tracking. For each trade, she logged confidence level before entry is 110, anxiety during the trade 110, urge to interfere 110, actual behavior versus planned behavior. The pattern shocked her. Every time a trade went 70% to target, my anxiety spiked to 810. I'd close early, every single time. Her solution was brilliant. After entering any trade, she'd close her platform and set an alert for her target. Then she'd journal about the trade as if it already hit target. This presumption of success rewired her psychology. When she went live again, the early exit problem vanished. This is the power of proper forward testing. It reveals not just if your system works, but how you work within your system. The most effective forward testing protocol I've seen comes from SMB Capital. They require all new traders to complete the gauntlet. Week 1 to 2, trade the system exactly as designed on SIM. Track only adherence, not profit. Week 3-4, add psychological pressure. They literally have someone stand behind the trader, randomly saying things like, "That's a lot of red," or "Shouldn't you take profit?" Sounds silly? Traders who can't handle fake pressure can't handle real pressure. Week 5 or 6, trade with real money but tiny size. The goal isn't profit. It's maintaining exact same behavior as SIM. Week 7 or 8, gradually increase size while monitoring behavioral changes. Only traders who show consistent psychology across all phases get funded. The failure rate, 85%, not from bad trading, from psychological inconsistency. Here's what most traders get wrong about forward testing. They focus on results instead of process. A losing forward test with perfect execution is successful. A profitable forward test with rule breaks is failure. You're not testing the system. You're training your nervous system. ICT trader MentFX documented his forward testing journey, posted every trade for 100 trades straight. The transparency was brutal. You could see his psychology evolve. Early trades showed classic errors like moving stops, adding to losers, closing winners early. By trade 50, behavior stabilized. By trade 100, execution was robotic. His advice? Forward test until you're bored. Excitement means you're not ready. When trading your edge feels like brushing your teeth, you're ready for real money. The psychological milestones that matter. Can you take 5 losses straight without changing anything? Can you hold a winner to target when it pulls back 50%? Can you skip a setup that's almost valid? Can you stop trading after hitting daily target? Can you trade exactly the same, whether up or down? Until these are automatic, you're not ready for significant capital. Period. A brilliant framework from the Trading Framework podcast. Treat forward testing like athletic training. Athletes don't go from practice to championship. They have exhibition games, scrimmages, increasing competition levels. Trading needs the same progression. Level 1, sim with no pressure. Level 2, sim with self-imposed pressure. Level 3, small real money. Level 4, normal position. Size, level 5, scaling up. Skipping levels is like a runner going from couch to marathon. Injury is guaranteed. One critical insight: forward testing reveals system flaws, back testing misses. Not technical flaws, execution flaws. Maybe your entry requires too many confirmations to catch in real time. Maybe your stops are mathematically correct, but emotionally unbearable. These only show up when you're clicking real buttons. So, here's your assignment. Before risking another dollar, complete 20 perfect trades in forward testing, not profitable trades. Perfect execution trades. Track your psychology as closely as your P&L. Type forward 20 if you commit to this. Share what psychological pattern you most need to address. Early exits, moved stops, revenge trading. Awareness plus practice equals progress. Remember, the market doesn't care about your back test. It cares about your behavior. Forward testing trains behavior. Master this bridge between theory and reality, and profits follow naturally. Chapter 8. Rituals. The hidden edge of consistency. Discipline isn't something you summon in the moment. It's something you install through repetition. The best traders don't have more willpower, they have better rituals. These rituals become psychological anchors, creating consistency even when everything else is chaos. Mark Douglas understood this deeply. In Trading in the Zone, he wrote about traders who succeed not through analysis, but through routine. They create what he called states of mind through repeated actions. The ritual becomes the trigger for the right psychology. Let me show you what this looks like in practice through traders who've mastered the ritual game. Momo trader Ross Cameron starts every session identically. I wake at 7 a.m., meditate for 10 minutes, review my rules out loud, then scan for gaps. Same sequence for years. The routine tells my brain it's time to trade. By market open, I'm in the zone automatically. His results speak volumes, multiple seven-figure years. Not from finding better setups, from executing the same setups better through ritualized preparation. But rituals aren't just about morning routines. They're about creating behavioral triggers throughout your trading day. The check-in ritual, Forex trader, Anna FX posts her approach. Every 30 minutes, I do a state check. Close my eyes, 3 deep breaths, ask, am I trading my plan or my emotions? This micro reset has saved me countless revenge trades. The entry ritual, a crypto scalper shared on Reddit. Before clicking buy, I say out loud what I see. Break of resistance, volume confirmation, risk $50 to make $150. Speaking it makes it real, stops me from fantasy trades. The exit ritual, professional trader Mike Bellafiore from SMB Capital teaches this. When you hit your target, celebrate for exactly 10 seconds. Ring a bell, fist pump, whatever. Then immediately review what you did right. This wires your brain to repeat success. The loss ritual. This one's crucial. Tom Hugard has a specific routine after losses. I stand up, walk to my window, look outside for 60 seconds. No phone, no charts, just breathing. This physical break prevents emotional trading. The loss ends at the window. But here's what most miss. Rituals aren't just actions. They're state changes. Each ritual should shift you from one psychological state to another. Pre-market ritual, from daily life to trader mode. Entry ritual, from analysis to execution. Management ritual, from hope to process. Exit ritual, from attachment to neutrality. Post-trade ritual, from outcome to learning. End-of-day ritual, from trader back to person. The power is in the transition, not just the action. A fascinating study from a prop firm tracked traders who used consistent rituals versus those who didn't. The ritual group had 40% less variance in their results. Not better results necessarily, but more consistent results. In trading, consistency is profitability. Let's talk about the neuroscience. Rituals work because they activate what researchers call implementation intentions. Instead of deciding in the moment, you pre-decide. The ritual is the decision. This moves behavior from the prefrontal cortex, which fails under stress, to the basal ganglia, which operates automatically. One trader explained it perfectly. I don't decide whether to follow my stop. My ritual decides. When price hits my stop level, I click out and start my loss ritual. There's no decision point. It's just what happens next. Creating effective rituals requires understanding your personal triggers and needs. Here's a framework. Identify your problem moments. When do you break rules? What emotional states precede mistakes? Which transitions are difficult? Design rituals for those moments. Keep them simple, 3-5 steps maximum. Make them physical, movement helps. Include a verbal component. End with a clear state change. Example, if you revenge trade after losses, create a loss recovery ritual. Close all charts. Write the loss amount in your journal. Do 20 push-ups. Physical reset. Read your Why I Trade statement. Set 15-minute timer before next trade allowed. The physical activity isn't random. It literally changes your biochemistry, flushing stress hormones and resetting your nervous system. Here's the critical implementation advice. Start with one ritual. Master it for 21 days before adding another. Trying to install 5 rituals at once ensures none stick. A reader asked which ritual matters most. The answer surprised me. The end-of-day ritual. Why? Because how you close one day determines how you open the next. Most traders shut their laptop in frustration or exhaustion. They carry that energy to tomorrow. Instead, try this closing ritual. Screenshot your trades, visual record. Write one thing you did well, reinforce positive. Write one thing to improve, growth mindset. Physically close your trading journal, symbolic end. State, today's trading is complete, verbal closure. This simple sequence creates psychological completion. You're not carrying trades home mentally. Share your biggest ritual need below. Is it pre-trade preparation, post-loss recovery, end-of-day closure? And if you already have a ritual that works, share it. Sometimes the perfect ritual for someone is the one you're already using. Remember, you don't rise to your goals. You fall to your rituals. Make them count. Chapter 9. Evolution. Your system must grow with you. No trading system stays perfect forever. Not because markets change dramatically, but because you do. Your energy shifts. Your life evolves. Your psychology deepens. And if your system doesn't evolve with you, what once felt like flow becomes friction. Eventually, it becomes a prison. Linda Raschke touched on this in her interview with Chat with Traders. I've been trading for 40 years. I'm not using the same system I used at 25. How could I? I'm not the same person. My risk tolerance, my patience, my life priorities, everything evolved. My trading had to evolve too. This is the forgotten edge. Most traders think system development is a one-time event. Build it, optimize it, trade it forever. But that's like wearing the same clothes for decades. Even if they still fit physically, they don't fit who you've become. Let me show you what healthy evolution looks like through real examples. Taylor's transformation is powerful. She built her system during what she calls her hungry years. Single, no kids, minimal expenses, maximum focus. She was scalping crypto at 1 a.m., running 6 screens, taking 20-30 trades nightly. The system fit her life perfectly. High energy, high frequency, high reward. Fast forward 3 years, married, new parent, freelance consulting business. She kept forcing the old system. 1 a.m. alarms with a crying baby, trying to scalp while on client calls, missing bedtime stories for London Opens. I was succeeding as a trader, but failing at life. She posted on a parenting forum. Something had to change. She didn't abandon trading. She evolved it, moved to 4-hour charts, trading only during baby's naps, switched from scalping to swing trading, reduced from 30 trades daily to 3 down 4 weekly. Income dropped initially, then stabilized higher than before. Why? Because she was finally trading in harmony with her life, not despite it. The pattern repeats everywhere. A programmer on Hacker News shared how RSI and his wrists forced evolution. Couldn't click rapidly anymore. Moved from scalping to position trading. My injury was a gift, forced me to find a style that I can do until I'm 80. Evolution isn't just about life changes, it's about psychological maturation. Young traders often need action, excitement, constant feedback. Mature traders often prefer patience, selection, quality over quantity. Fighting this natural progression causes suffering. Ravi's story illustrates this perfectly. Built an algorithmic trading system in his 30s, fully automated, trading around the clock. By 40, something felt off. The profits were there, but the passion wasn't. I felt disconnected from my own success, like I was watching someone else's money grow. His evolution was adding humanity back to his system. Weekly manual analysis sessions, discretionary overlay on certain setups, reduced automation from 100% to 70%. Profits actually increased. Turns out, I needed to feel involved. Pure automation was profitable but soulless. So, how do you evolve without destroying what works? Through what I call iterative identity integration. Fancy words for a simple process, regularly checking if your system still fits who you're becoming. Every quarter, ask yourself, what's changed in my life, energy schedule, shop priorities? What parts of my trading feel forced versus flowing? What would I build differently starting today? Which rules do I consistently struggle to follow? The last question is crucial. Consistently breaking a rule isn't a discipline problem. It's a fit problem. The rule doesn't match who you are anymore. A concrete example. After his second child, a trader kept breaking his trade every day rule. Beat himself up for months about lack of discipline. Finally realized the rule was the problem, not him. Changed to trade when optimal conditions align. Pressure disappeared, performance improved. Evolution principles that work. Preserve the core, adapt the expression. If breakout trading is your edge, keep that. But maybe evolve from 5-minute breakouts to daily breakouts as life gets busier. Test changes in isolation. Don't overhaul everything at once. Change one element, trade it for 20 trades, evaluate. Gradual evolution beats revolution. Document the why, not just the what. When you change something, write why. Future, you will need this context when evaluating further changes. Honor your season. Sometimes evolution means trading less. A trader caring for aging parents reduced from full-time to 2 hours daily. Income dropped 30%, but life satisfaction doubled. That's successful evolution. Let identity lead strategy. Instead of I am a scalper, try I am a trader who currently scalps. The method serves the identity, not vice versa. This mental shift allows evolution without identity crisis. Here's your evolution audit. Answer honestly. What aspect of your trading feels heaviest right now? If you were starting today, what would you do differently? What life change is coming that might require system evolution? Share one thing about your system that no longer fits. Maybe you're a night owl trading London mornings. Maybe you're naturally patient, forcing yourself to scalp. Naming misalignment is the first step to evolution. Remember, the best traders aren't loyal to their systems. They're loyal to their growth. Your system should be a living document of who you are, not a monument to who you were. Chapter 10. Bringing it all together. You've journeyed through the psychology of trading failure, discovered your trader type, built aligned architecture, designed entries that match your mind, calibrated emotional risk tolerance, installed guardrails, forward-tested reality, created rituals, and planned for evolution. Now, let's see what this looks like when it all comes together. Remember the stories from Chapter 1? Let's revisit them with new eyes. That Reddit user who blew 3 funded accounts trying to copy ICT strategies? After finding this approach, he posted an update 6 months later. Turns out I'm a Type 3 trader, patient stalker, trying to trade like Type 1, momentum. Switched to daily charts, taking 1-2 trades weekly. Past funded challenge, first try with my own system. Same knowledge, different application. Risk manager, Sarah, the mom who nearly destroyed her marriage trading London at 3 a.m., accepted I'm Type 2, systematic. Built a checklist system for NYSE Open while kids are at school. Trade 90 minutes daily, consistent green months. Husband actually supports my trading now because it fits our life. These aren't miracles, they're alignment. The transformation follows a predictable pattern. First comes awareness. You realize you've been forcing yourself into someone else's framework. The relief is immediate. You're not broken, you're just mismatched. Then comes design. You build a system that honors your psychology, life situation, and natural rhythms. It feels strange at first, too easy, too comfortable. You wonder if struggle was actually your edge. Next comes testing. You forward test not just the system, but yourself within it. You discover which behaviors need guardrails, which emotions need rituals. You iterate based on reality, not theory. Then comes consistency. For the first time, following your rules feels natural. You're not fighting yourself. Execution becomes boring in the best way. Profits are a byproduct of alignment, not forcing. Finally comes evolution. As you change, your system adapts. Not dramatically, but organically, like a tree growing new branches while roots deepen. But here's what nobody tells you about this journey. The biggest transformation isn't in your results. It's in your relationship with trading. Trading stops being a war against the market or yourself. It becomes a practice, like martial arts or music, something you refine over years, not master in months. The pressure disappears because you're finally being yourself. A funded trader put it beautifully. I used to trade to prove something. Now I trade to express something. My system is just me, structured. The profits are nice. The peace is priceless. This brings us to the ultimate realization. You haven't been building a trading system. You've been building a mirror. Every rule reflects your nature. Every guardrail protects your weaknesses. Every ritual reinforces your strengths. The system is you, externalized. When you trade from this place of alignment, something shifts. Decisions become clearer. Emotions become manageable. Results become consistent. Not because you've conquered the market, but because you've stopped conquering yourself. Your next steps, you have 2 choices now. Option 1, return to the struggle. Keep forcing systems that don't fit. Keep fighting your nature. Keep wondering why discipline fails when pressure mounts. It's familiar, even if it's painful. Option 2, Begin building your aligned system. Start with awareness. Take the trader type assessment. Notice your natural patterns. Design one element that honors who you are. Test it. Refine it. Evolve it. The market will always be there, but this moment of clarity might not. You've seen successful traders weren't using better strategies. They were using strategies better aligned with their psychology. So here's your call to action. Step 1. Comment your trader type below. Own it publicly. Type 3, patient stalker here, done pretending to be a scalper. Step 2. Share one specific change you'll make this week. Maybe it's admitting you need higher time frames. Maybe it's installing a 2-loss lockout. Make it real. Step 3. Connect with others on the same journey. Subscribe, hit the notification bell. Next week, we're diving deep into specific setups for each trader type. Remember, Paul Tudor Jones adapts his system to his life. Linda Raschke evolved with technology. The Reddit success stories stopped copying and started creating. Now it's your turn. The market doesn't need another strategy. It needs you, trading like yourself. Your edge isn't in your indicators, it's in your alignment. Stop trading like someone else. Start trading like the best version of yourself. Welcome to the beginning of your real trading journey.